Well, hello everybody, and welcome to this session of the ESG and Tech Show. My name is Susan HayesCulleton, and I am really and truly delighted to be your host for this episode. We are going to talk about many things today, and among those, of course, are the fastest growing ETFs in this whole area of ESG. So first of all, you're all super welcome to this edition of the ESG and Tech Show. As I mentioned, my name is Susan Hayes, and Susan HayesCulleton, I should say. And this particular show was born out of the idea that ESG is an area that's growing hugely in the financial markets all over the world. They really and truly are. We're going to talk about where today. We're going to talk about why. We're going to talk about pockets of growth, new developments within the ESG industry, and of course the technology that is underpinning all of that. So first and foremost, as always, I always like to do this to figure out where everybody is tuning in from. So can I ask you to please pop into the chat what part of the world that you are tuning in from today? And what I'm going to do is that I am going to take a look here. As you know, I always have you right up here in front of me. Here, I have it on the phone so that we don't have any interference in the background from the audio or anything else like that. So if you could just pop into the chat where you're tuning in from. So I see here a couple of people asking me what is ESG. We're going to talk about that as well for sure. So let me take a look at over here. So I see a lot of people saying good morning, good afternoon. I have to say I am here live from Dublin, and it is a beautiful day over here. We're in the height of summer here in Ireland, and it's wonderful. Now let me see. Good day to everyone. So let me see. Oh, Chris is here for the first time. Oh, super delighted to have you here. Good afternoon, Margaret. Great to have you back. Julie is here. I know, Julie, are you tuning in from London? Same as always, or are you on your travels? Lovely here to see that we have a lot of people here from VV Nation. Hi, Annie. Great to have you. Drew, super to have you. Bill and Nies. I'm absolutely going to answer that question around what is ESG. Margaret, super to have you here. So, Nies, you're tuning in from Montreal. Tony is here from Ottawa in Canada. Stephen is here from Florida Keys. Julie, yes indeed, London, super. Do you know what, Julie, I haven't been in London in ages, and I'm really looking forward to the next time I get across. Bill is from Salt Lake City in Utah. Jamie's here from New Mexico. TW is here from LA, California. Edmonton, Chicago, Missouri, Atlanta, Milton Keynes, UK, New Haven, Connecticut, California, Montreal, Toronto, Orlando, Texas, Ireland, Memphis in Tennessee. Wonderful. Well, keep them coming here. As I say, we're really delighted to have you here with us. Now, first of all, let me answer Bill's question, which is what is ESG and why is it taking the world by storm? Okay, ESG, there's three letters in there, E, S, and G, right? E stands for environmental, S is for social, and G is for governance. And the whole idea of ESG investing is that you invest based on picking the metrics around each of those areas or those areas collectively. So traditionally we would, when I say we, as in the investor community, particularly the retail investor community, what we would have done is that we would have chosen stocks based on earnings and dividends, right? Let's just say we wanted to pick out earnings growth, or we wanted to pick out dividend yield, or we want to pick out earnings yield, or the PE ratio. Of course, many of you who are familiar with VectorVest, who is of course behind this show, you will know as well that there's a lot of proprietary indicators here at VectorVest, including relative safety, which looks at consistency and predictability of financial performance, or of course people might have invested based on technical analysis like RSI, or maybe they might have based on moving averages or support and resistance, etc. So ESG is a different type of investing. This is where you would invest based on or in conjunction with a company's ESG details. Now, I just want to pop on over here and just also see where there's more people coming in from. We have got Clemson in South Carolina. Julie says it'd be lovely to meet you if and when you get to London. Absolutely, Julie. Let's make that happen. Maryland, sunny London, Margaret says. Antwerp in Belgium, says Andre. That's probably where I'm going to be next, actually, based on a trade show that we're working on in Belgium in a couple of months' time. Tucson, Arizona, Haiti. Oh, wonderful, Joel. I think it's the first time we've had someone from Haiti. Shay's also from Maryland. Spore, here I come. Scott's from Chicago, Connecticut. Christian is from Ontario, Canada. Wonderful. Keep all those locations coming. Now, Bill needs to go back to your point around what is ESG, because a lot of you might say, is ESG the same as SRI? Now, it's not. And I just want to clarify the difference between those two. So socially responsible investing, that's SRI. Socially responsible investing is where I take my money and I'm going to invest in stocks or companies or funds where I believe that I can have the greatest impact, or where I'm putting my money to back projects to have certain impact. You might say, okay, but what's the difference? Okay, and here's where I really want to refine it right down. SRI is putting my money into something that will have an impact. It is investing in a socially responsible way. ESG are metrics. It is by measuring certain stocks according to ESG metrics that I make my decisions. So it's not about what I do, it's how I measure what I'm going to do, right? So it is a slight difference, but it's important. So, and they're often used interchangeably, but I just want to give you the proper nuance in the background, which is ESG is a way that you measure the performance that stocks or companies or funds have on certain metrics, which are environmental, social, and governance. Okay, I see there are lots more people coming in there. Wonderful. Keep on chatting. We're only delighted to have you. And by the way, just like Bill has done, if you have any questions about this area, put them into the chat. I'm here, I'm live, so I'm able to see what's coming in. For anybody who is looking at this video afterwards, please, of course, feel free to put your comments in the comments area. More than happy to answer them there. And there's a lot of us, a lot of you know the other members of the VectorVest YouTube team, whether it's Glenn or, of course, Joey, the wonderful Joey who can solve any problem. We're all here and we're all always watching what the comments and how they come in. So please do feel free. Pop your questions in the chat if you're here live. And of course, if you're not, put it in the comments and we'll certainly make sure and get back to you there as well. Okay, so the thing is, you now might say, okay, why is this gaining such momentum? Well, let's go back and see when it didn't, right? So ESG investing back maybe in the 90s was a very, very new thing, okay? And the whole idea back then, we say, for example, we didn't have the Paris Accord, we didn't have the Sustainable Development Goals, we didn't have these big global initiatives where countries got together and said, right, we must do something in order to progress the environment, equality, etc. Right? So those kind of weren't there. And then as time went on, people thought, I mean, we can use our voice to make certain changes in the world. We can use our, we can decide where we spend our money to make certain change. We can be activists in certain ways. But actually, one of the biggest assets, as the name suggests, that we have, of course, is our investing capital in order to affect change. So then, of course, that's where impact investing came from and socially responsible investing came from. But really, at the time, it would have been seen and backed by the data that if you were to be socially responsible in terms of your investing, you may have been doing so at the expense of gains, of the traditional gains. If you were to compare socially responsible index in comparison to, let's say, the S&P 500 or something else like that, you may not have been rewarded. But that's changed. That has changed for a number of reasons. Number one is now bigger and bigger companies, those very companies that comprise the S&P 500 or the DAX in Germany or the Euro stocks in Europe or the ASX in Australia or whoever, they have all now gotten behind the sustainability agenda in terms of maybe gender equality, maybe environmental concerns, maybe carbon neutrality, etc. So a lot of the bigger companies have now actually got behind this. So where companies that would comprise the S&P or any of the others are now actually comprising the ESG or sustainability indices as well. And then the second thing, of course, is that there's also, like, why should they not work? Is in many ways is that if a company is environmentally sustainable, if it is governed well, and if it's a place that people want to work, if it does have social impact and works with the wider stakeholders in the community, well, then wouldn't that be rewarded in the marketplace? Wouldn't it be? And if it would be, well, then wouldn't that be rewarded through the triple bottom line? And one of those triple bottom lines, by the way, people, planet, profit is the triple bottom line. It would be rewarded in profit. So all of those have come together. Now, then, of course, over time, we did have the Paris Accord. We did have the Sustainable Development Goals and the principles of responsible investing, and all of those other big, massive, big deals around the world have been made, and therefore it's now easier for companies to actually shape a goal like carbon neutrality by, let's say, 2030, or like scope 3 carbon neutrality by a certain date, etc. So for all of those reasons, that is why ESG investing is to a large degree taking the world by storm and would be expected to overtake traditional investing based on what I told you around earnings and dividends PwC predicts by 2025. So I could see this happening. By the way, I also want to point out, as you can probably guess, I told you I'm live from Dublin, but I'm also Irish. And if I'm Irish, that means I'm also European by virtue of the fact that Ireland is in Europe and Europe is leading the way. Europe is, and I'll give you the statistics on that in a while, Europe is leading the way. There is more money going into ESG investing, both as a percentage and in general, in Europe than other parts of the world. It is leading the way. So therefore, when we do have our global meetings with VectorVest, which we do regularly, and when we were having a discussion about, major trends that we were seeing in the world and in the world of investing in recent months, I certainly put my hand up and said, look, ESG investing is the way things are going. For sure, as well as technology. And I'll tell you all about the technology story another day. But it's for those reasons that I said, okay, I really think that VectorVest needs to establish itself as a thought leader. And we have lots and lots and lots of insights for you, lots of information for you. So I hope you can see lots of energy for you as well, so that we can bring these insights to you from around the world and spearheaded right here from Dublin, Europe. That's why. So it's a long answer to a short question. So let me just see here. Jerry is here from Texas. Jamie says, define the narrative socially responsible and who defines it. Okay, and you're right there. You're right there indeed, Jamie. The socially responsible would come from those global representation from the point of view of the UN, or like I say, the Paris Accord or the Sustainability Development Goals, which also comes from the UN. It would be a globally recognised area. The ESG principles are different. And that is where a lot of the traditional indexes that we know, like Standard & Poor, are coming up with their own. And I'm also going to tell you about that today. Okay? So, Nice says you can't wait to build a watch list. Well, that's what we're going to do. That's what we're going to do. And let's get right in. So, what I said I was going to talk to you about today are the fastest growing ESG ETFs. Super quick lesson here on what an ETF is. Actually, before I even do this, can I just hear in the chat, how many of you A, know what an ETF is, and B, have invested in them? Let me just hear. I don't want to be telling you what you already know. So I'd just like to get your thoughts on this. Personally, I've been investing in ETFs for years. And ETFs, which again, I'll explain to people who don't know, but just I'd love to hear from you in the chat, whether you know about them and whether you've been investing in them for a while. And I've been investing in ETFs I think my first ETF was 2009. And actually, if you look at when the first ETF was in 1993. It was actually back in Japan. Then the Spider ETF came out in 1993. But really 15 years later in 2008, that was when ETFs really exploded. And the year of the change though in ESG ETF investing was last year. That's why you've got your finger on the pulse. Being right here. So tell me, how about you? And he says yes, you're in ETFs. Bill says yes. Shay C has got I love your emoji there, like it. Julie says yes. Jamie says yes, wind, okay. Mike says yes. Jack says yes. Christian says yes. Margaret says yes. William says yes. And Nice says you like triple leveraged indices, right? You like to live dangerously there, Nice. Okay. So to those of you who don't know what an ETF is, and then I'm going to jump right over to the program. An ETF is an exchange-traded fund. Let's start with the last word. So a fund is a collection of stocks, or it could be a collection of bonds, or it could be a collection, but it's a collection of securities. What I'm going to show you today is going to be a collection of stocks, what I'm going to talk about. So they're a collection of stocks, and you might say, okay, but doesn't that mean the same thing as a mutual fund then? No. The difference is the ET bit then, is exchange-traded. If I was to buy a mutual fund, I would need to go to a mutual fund provider. I would need to buy from them. I would need to sell back to them. Whereas instead, what we're going to talk about today, I can buy and sell through a stockbroker. Okay, so we're going to have lots of opportunities to talk about ETFs over the coming episodes and months and years ahead. So I'm going to park that there unless anyone has any questions. And please do pop them in the chat if you have any specific questions about them. I'm more than happy to talk through them. Based on what I'm seeing here, William says yes. Margaret says yes. William says lots. Margaret says yes, have used and I'm still using ETFs. Voljack says why. Kronos says not yet. Annie says yes. Okay, sounds like so. You know what we're talking about. Now, if I just wanted to show you the fastest moving ETFs, I could do that in a click of a button. In fact, not I could, I will. I'm going to do it for you over here, right? I'm going to bring you on over here, right? Going to bring you on over here to the VectorVest system, going to bring you to the home page, and I will show you how to find the fastest moving ETFs super quick. That's not the brief for today, by the way. The brief for today is to look at the fastest growing, and I haven't defined that for you yet, fastest growing ETF. So I'm going to talk to you about that too. And I see Shay has asked me another question. Shay, I'm super happy to answer that for you. But before I get to that, Annie, interesting that you're asking that question. So I'm just going to head on over here. Okay, now all I want to find out is what are the fastest moving ETFs. That's all, right? Not ESG specific. I just want to find the fastest moving ETFs. So here's what I'm going to do. As you can see here, I'm up at the home page here on VectorVest. I'm using VectorVest US. I could use this for any of the markets that we are in. So I'm going to click on over here to Viewer, and then I'm going to come down here to ETF Viewer. Okay, anybody who's open on their system, hope you're following along there with me. Now, all I need to do now, right? So you can see here I've got a list of ETFs. So this is in reverse alphabetical order. You can see my symbol. You can see relative safety here, exchange, price, etc. But I'm going to bring you all the way over here to RT. RT. Now, for those of you who aren't familiar with RT is relative timing. Relative timing is the direction of a stock, right? Or in this case, an ETF. So above one is favorable, below one is unfavorable. Magnitude of that direction, which means the force at which it's moving, and also the dynamic. So is that really volatile, or is that, rock steady Eddie? So that is what RT is. It's the direction, magnitude of that direction, and dynamics of a share price. The higher the RT, the faster it's moving to the upside. That's it. So by simply clicking this button here, and I'm going to change this to the top. Okay, all right. So as I have this here at the top 20, there you can see that the fastest moving ETF right here is natural gas. Okay, not quite very ESG friendly there. MCR sectors multiplied by 3. Nise, I think that's for you. Direction technology by 3, direction cloud by 2. So all of these are leveraged ETFs. We'll talk about those another day. But you can see here all of the various different ETFs, and these are ranked in terms of how fast they're moving. That wasn't the brief for today though. The brief was to find the fastest growing ETF, right? So let's go on and investigate that. Now, I'm first of all going to answer Shay's question, which was, what was the first ETF I ever had? I'm going to type it in here. It was this, IOO. That was my very first ETF. IOO is a global ETF. And I always thought, this makes perfect sense to the person who's starting off at the beginning. It's simply the global top 100 stocks in the world in terms of size. Back then when I was investing, ESG was not a thing. Or certainly wasn't a popularized term. It wouldn't have been a thing that if I had gone to VectorVest and proposed that we build a show all around it, that they would have said, okay, yeah, sure. So the iShares S&P 100 Global is simply IOO's ticker code. And it's basically one that delivers the global stock market return. Simples. That's what it is. The largest 100 companies in the world. Not necessarily American. If I remember now, the last time I looked at it, because I don't have it anymore, but I've since developed more nuance into my portfolio. But probably a significant proportion of that would be invested in the States, would be invested in really big companies globally. Just does a diverse, low cost job of simply tracking index. That's it. That's basically it. That is your answer, Shay. Annie, you were thinking the same thing. Good stuff. Delighted to hear it. So then Annie also said, what's the best ETF? And you see, the thing is, right, Annie, is in order to figure out what the best is, I'd have to figure out what do you define the best to be, which is basically what we now need to do. When I laid out this proposed episode, because every episode that I propose, VectorVest don't just say, oh yeah, cool. I have to kind of put forward why I want to talk about it. And I think it's worthwhile considering what is the fastest growing ETF, is that we have to think about how we might define that. Shay says, great, thanks. You're super welcome there, Shay. Okay, so can I ask you, right? I have multiple definitions of what I believe fast growing means. Okay, so can I ask you first of all, what do you think fast growing means? Because I have multiple definitions of this and I just want to hear what you think. So fast growing, right? So I could say one that has the greatest share price change. I could say the one that has gathered the most AUM. assets under management. I could say, you could look at this in a different way and say, well, where are the indexes? Where is the demand for the new indexes? Because that will probably predict what the ETF providers are looking for. I may look for ones that have the greatest increase in volume. So what do you think? So how do you define fast growing? Let's just hear what you have to say. So I think Niamh here is giving me an ETF specifically. Okay. Let's just see what you have to say. Then what I'm going to do is I'm just going to tell you about a world first that I'm just going to play you about 2 minutes of a video to tell you. This was breaking news last week that a lot of people didn't realize. It's we always talk about ETFs, hoovering up money. Like there's massive inflows to ETFs, much more so than mutual funds. But something happened last week that I want to tell you about. Jack says fastest returns in terms of price and dividends. So what you mean by that, Jack, is total return. So William says price appreciation. Julie says rate of change of prices and dividends. Okay, I'm going to show you how to look for these. And remember, is that we can't just talk about these in terms of the past, because I can show you, okay, these are the fastest growing ETFs in terms of looking in the rearview mirror, but does that mean that they will continue? I want to show you how to look forward. Strength and volume, Annie, interesting. Volume is certainly something I'm going to talk to you about today. Okay, Bill says use GRT for fastest growing ETF, but I see that that's not available. You see, Bill, you're correct on that, is because the earnings of an ETF, of course, are simply the weighted average of the companies that comprise the ETFs. So therefore, and since they're always changing, yeah, there certainly can be that issue. All right, let me play this for you. Okay, I'm just going to play a video for you here. 2 minutes long. You like Jack's idea. Okay, that's good, Annie. Great to hear that you're having the chats with each other as well and figuring these things out. Okay, let me go over here. Going to play quick YouTube here, and of course we have to get through the ads, right? So I got past one of them. Okay.
Introducing Lucia, the perfect tool for.
Okay, now what you can see here, right, is that this is the headline for this is, I'm just going to get out of the way here and show it to you, is ETFs have had a record first half of the year. They've been on fire. BNY Mellon, global head of ETFs, but he says something 2 minutes into this video, 2 minutes in, that is the first of its kind. And I want to make sure that you're aware of this, that the fact that this can actually happen. I'm just going to go right up here, up to 2 minutes. I'm going to let this play then for 2 minutes, just so you're aware of that this actually might be happening. You can go and you can take a look at this afterwards if you'd like, but this is a breaking news story. It only broke a week ago. Very few people picked up on it. Okay, let's go.
Earlier this year with the first ever conversion of a mutual fund to an ETF. More recently, we saw a very large conversion by dimensional fund advisors take another step and convert some of their ETFs. But as a shareholder, really it's about demand. The market is demanding the ETF structure, and that is really becoming more and more the preferred way to consume investment content. And ultimately, if you are a shareholder in a mutual fund and your company or the fund that you're with is looking to convert, you really have a few options. One is to ultimately, you could sell your shares, you could transfer to a mutual fund that is not converting, or you could transition from a mutual fund to an ETF, but you would need a brokerage account to be able to have that change occur. But in many ways, there are benefits, right? Lower cost, liquidity, transparency, all of the benefits that you see alongside, some of the tax efficiency we also see with ETFs are benefits that shareholders sees, and we expect this trend to continue.
Now, I'm just going to stop it there. Okay, so the big story that broke at the time was that for the first time ever, and this only happened last week, is that mutual funds are now being converted into ETFs. Now, that's a different dynamic entirely. That is telling us that not alone have ETFs been, soaking money up, which they have. What it now also means is that on the other hand, is that now actually mutual funds are being converted into ETFs, which is a really interesting development. And again, it just points to the constant pace of this particular market. Now, I will tell you that when I have been asked to either speak at Trending Thursdays with Glenn, by the way, shout out to Glenn if you're looking at BV Nation, Glenn, you're amazing. Is that anytime I've been asked to speak on Trending Thursdays, and one time they asked me to host Trending Thursdays, I felt like I was taking care of someone else's kids. I honest to God, I did, because Glenn loves his Trending Thursday audience, just like how much I love you and our Fantastic Female Friday audience. And when I was tasked with taking care of them in his absence, when I was talking about those areas, I picked on two. I was asked to speak about 5 themes. Joey asked me for 5 themes. One of them was ESG generally, and the other one was ETFs, because I think this is a trend that is just going to keep on growing. And that just points out to a whole other new pocket of funds which could be existing in mutual funds that could be converted into ETFs. It's a big deal. Okay, it's a big deal. Right, now, let's now think through a couple of definitions of the fastest growing. And I want to go back here to Annie's point about volume. Nise, what I'm now going to do is I'm going to start taking you and everyone else over here to VectorVest US. Let's start building a watch list. And now let's take a look at some funds. Simply, this time I'm going to look at where the greatest volume has changed, okay? So let me now just pop on over here to the VV program. Okay, and let's take this from the top, right? So let's take this. So I'm going to take a look at ESG, for example, right? This is a Flex Shares ESG ETF. I'm also going to take a look here at ESGU. Okay, this is the iShares MSCI ETF. And what else am I going to do here now? Let me take a look at ESGD. And this is one of the this is an interesting ETF in my opinion, is because if you look at all of these, right, this one is actually looking at ESG factors, but now in Europe, Africa and the Far East. Okay, and let me see here. So Nise says, I like ETFs because I go into VectorVest, rising industries. Then I look for ETFs in that industry. I find it easier than stocks. I'm going to show Nise. I'm going to show everyone else how to pick up on what you're talking about there. Let's have a chat about that. So, what I'm noticing about the ETF industry and the ESG ETF industry, I am conscious that there's a lot of letters in there, is that they're now expanding, right? We're now expanding into other areas. It's not just ESG globally, ESG in the US, ESG in Europe. It's now expanding globally I see it going in 2 directions. Number one is in, for example, into the developed markets like this one. And this had rapid increase in volume. We're going to take a look at that. And the second thing I see is that it's now dropping into the lower caps. So instead of this simply being like, I'll just add this in, I'll take it out again, KLD, where KLD is one of the biggest ones. iShares KLD 400, this one of the most common ESG ETFs you're going to come across. One that, like, generally when we're looking at a benchmark, just a broad benchmark of, generally speaking, that sustainability agenda in companies, that's really one that would have been around a long time. Now, when you would look at that though, that is just broad. It is also based in the US. It is, big caps, etc. Whereas now, when you're seeing something like this, iShares MSCI, EAFE, it's going further into kind of those developing markets. Now, Europe is not a developing market, but Africa and the Far East certainly would be. So that's what we're starting to see, is that this ESG agenda being pushed forward. Okay. Let me see who else said. Margaret, good point. Margaret said, last week I heard a fund owner say that their mutual fund was being converted into an ETF. I thought I was hearing things. You see, Margaret, I would have said the same. I would have said, what? Seriously? No, I don't think that would be the case. That is becoming the trend, is that why would you continue as a mutual fund if your customers are looking for ETFs and you're at risk of losing them? Makes sense, but it's only starting to happen in the past week. That's why I wanted to let you know that is a recent development that I felt you should be aware of. Okay, I'm going to take out DSI here now, and let's take a look at, for example, let's take a look at ESGU, right? So I'm going to head on over here to ESG. Oh, sorry, I have it right. ESGU. Here we go. Right. Now, as Bill mentioned, we don't have earnings data, so there's no point in looking at the EPS side of things there. Let's instead take a look at volume. And now we need to toggle it on. Okay. And let me now increase this. Okay. So what you can see here is, let me go back. What you can see here is prior to 2020, you can see here that there was very little volume here and something like this. By the way, this is simply in the US. Where you can see then is that there was a really big change. Like I told you, last year was the year of ESG. Big change in volume, and look at that. Look at that. That basically turned around there from the same time that everything was starting to turn around, round about there at the end of March. Do you know what I'm going to do? Actually, let me put on the confirmed call as well. Oh, there it is. So the confirmed call was saying from here, this is when, now the confirmed call is the latest, it's the most conservative form of a VectorVest indicator. At this stage, this was the latest time that VectorVest was calling the market turning. Before that, if I look at the MTI or if I look at other market timing instruments, you'll see they were earlier. But even if I go as far as that, you can see here that from then on, you could just see that that the iShares MSCI USA increase. So you can see here a massive increase in volume, but also then we can see pretty much a very high CI type stock. Look here, and it is ETFs, speciality and environment there. Okay, so that is ESGU. Let's take a look at ESGD. Okay, let's take a look at this one. Pretty similar one, only this time you have got more diverse exposure, right? Again, look here at the volume, right? Pre-2020, and I'm in the way for most of it there, right? Just so you can see, right? There you can see an awful lot there of like very, very slow, and I have average volume. I have average volume over 50 days. So, because I think it's important to see that over a period of time rather than just individual days. Look again at that. If I was to put on my confirmed calls there, you can see where it's at. Now, the average volume there is coming up around about 400,000 shares, so well above what it would have been, let's say back here, which would have been around about 61,000 a day. Now much more, so up to your hundreds of thousands. And bear in mind, this would be a more diverse ETF. What was the other one that I said there that I had? ESG itself, ESG. Okay, Flex shares. And let me go down now to that one. There we go. Pretty similar again, but now look at this massive increase over here, massive increase in volume, particularly here in 2021. And again, you can see that we just have that lovely, just a lovely graph itself, starting here from the bottom, from when the market dropped. And as I say, it dropped for everybody. Then just in that beautiful, starting at the bottom left, moving up to the top right, top right hand corner. So you can see there three very quite similar graphs, different types of exposure, and that's where I'm seeing these types of change growing, is either in those global, like those big kind of massive, not necessarily picking on a specific theme, like not just clean energy or not just solar energy. There's lots of ETFs like that, and I've spoken about those before, but actually those kind of global themes. And also, particularly I wanted to point out to you is that the interest, the interest is growing in these types of ones that are now moving more into the frontier, moving into the more developed markets as well. So that certainly is one area that I wanted to talk to you about. Is number one is RT, is looking at relative timing, and then number two is also looking at the growth in volume, and they were some examples of that. Now I just want to test out Nees's idea here. So he says, I like ETFs because I go onto VectorVest rising industries, then I look for ETFs in that industry, and I find it easier than stocks. Okay, so how we could build that is, let's here go into Unisearch. Okay, I'm just going to take out this because I was taking a look at these earlier. So what you do is that you look for industries. Okay, so I'm wondering now how you do this. Maybe do you do filter by industry group, and over here then you say is equal to, and you put in here as, do you put it in here as a delta, or do you put it in here in terms of the industries that are moving in terms of RT? That would be just an interesting thing just to figure out there from you. The other thing, of course, as well, I'm just going to put in, for example, I'm going to put in the fastest moving industries. Fastest moving industries in terms of 13 weeks, let's say by a quarter. And what I'm also going to do is I'm also going to filter to make sure that my industries are filtered by a sector, and that sector is selected sectors, and they are ETFs. So let's say that I could do this. So this is where I've actually picked out that the only industries that I want are ETFs, and that I want to find the ones that have changed the most in the past 13 weeks. If you were looking for momentum, you could certainly do that. And I can't find any results. Okay. Right. Now, another thing that I could do is, if I just, let me just take away that parameter. Let me just look at my ETF sector. Let me just look for ETFs themselves. And over here, I might scroll by RT, but you know what? That's just going to give me the same as if I go by viewer. So that is the same thing as me going into ETF viewers. You can see there I basically get the same ones. Knees, you also mentioned TQQQ here as well as an ETF that's changing fast, and it certainly is. Of course, as we now know, the markets are live. They are open. They've been open now just over 2 hours. So we're also seeing now is that the ProShares natural gas there is up again. Okay, so if anybody has any other ideas that you want me to test out, please do let me know. Okay, now let's come back in here, and now what I just want to do in terms of the fastest growing ETFs, can I now take you through another trend that I'm seeing? And that trend is, let's take a look at the types of indexes that are being introduced. So that's another way of actually saying where the greatest interest is coming from, because if you see an index provider creating an index, they're not doing that for the fun, or as we say in Ireland, for the crack. That is CRAIC. It's the Irish word for fun. You could learn anything in this show, couldn't you? So they're not just doing this for the fun. They're doing this out of demand. So what I now want to do is I want to show you two different types of indexes that are now developing. Delighted Niece says this is great content. I am here to take care of you all. That is what I'm here for. Okay, let me now just show you this. Here is the type of indexes that are now being developed. You see what I mean is they're dropping the caps. They're now the indexes themselves, the index providers themselves are now dropping the level of the cap. And thank you indeed, I appreciate that. So I've just got you've all got it there in the chat, is we would really, really love if you would click on the like button, because we want to make sure that we're doing for you what you like. Absolutely, that is what we're here for. The last show particularly focused in on not just real estate investment trusts. It looked in at real estate investment trusts with a sustainability bent to it. And they are, so when we look at, we sub down there and we looked at types of Internet of Things, we looked at, sustainability monitors in houses and sensors and Internet of Things to be able to increase people's safety and decrease energy usage. How is all that funneled into an investability theme from real estate? So before that, we also looked at 5 big trends in terms of sustainability as well. And we looked at how we could invest in those, to just major trends in sustainability. So we looked at sustainability, and then from there, how do we invest in them? And then we looked at there, we then analysed those types of investments. So please do, if you would, we would really, really appreciate if you would press the like button. We'd love for you to press the like button if you're enjoying this. And we will make sure, you know what probably might be a good thing to do is if we have this type of episode, maybe once every couple of months, so that we can review the changes and trends in ETFs along the way, in line with both of the two themes of our show, which is both ESG and technology. I think that might be worthwhile, so we can always make sure your finger is on the pulse. Okay, so if you would please like the button, we would be so appreciative. Julie says, do you think there might be any changes coming that would allow UK residents to buy US ETFs? You know what, Julie, a lot of people here on the show won't even know why you're bringing that up, but I do. Let me tell you this briefly, right? Just tell the rest of the world briefly, because I know a lot of you are here from the US, you're here from Canada, and you're here from other parts of the world. Recently, the European Union introduced regulation whereby unless an ETF had a KID is a key investor document. Unless an ETF had a KID, well then it wasn't, and it was going to be, it needed a KID in order to get the regulation called UCITS, which is Undertaking in Collective Investments in Transferable Securities. Unless it was UCITS approved, well then a EU-based investor could not buy one, right? So for example, if I was to talk to Julie, right? If I was to talk to Julie about IOO as an ETF, right? Let me go on to the IOO ETF here. Just go look at their fact sheet. Okay. Then let me go over here. I'm going to go over here to the iShares 100 ETF. Is there a KID? KID, Key Investor Document. Is there a KID? No. There's a fact sheet and there's a prospectus, but there's not a KID. There's not a Key Investor Document. That is why, Julie, you or me could not go and buy that directly. By the way, there is a route around it. And that is to sell a put, because you would be allowed to do that. And of course, if you sell a put in that ETF and then it gets, particularly if it's in the money, in fact, especially if it's in the money at the time of expiry, then that's different. But let me just show you, for example, what else am I going to show you? I'm going to show you Global ETF UCITS. Right, best global ETF UCITS. I'm going to say here, iShares. Let me go to iShares. I'm just going to say global ETF UCITS and iShares. But because I'm putting in UCITS, it has to have a KID. Now, here's one, for example, a global ETF in Europe. And if I go in here now into iShares UK, now you see, there we go, KID. It has, now you might also see KIID, which is a key investor information document. That's the two I's, same thing. So Julie, that was just to explain to everyone. Look at that return, 12.5% so far. The world stock market really is, it's a good place to be at the moment. So Julie, to go back there, that's another article I want to show you. But anyway, to go back there to your point, do I see a change then coming for for UK investors? It's so hard to call, Julie. I mean, if you listen to the news at the moment around Brexit, I mean, at the moment, the British government is now looking to kind of stall things in terms of the protocol and so on with Northern Ireland and so on like that. So I think there's an awful lot of, there's an awful lot of questions to be answered at a very macro level before we get down to a micro level like this. So I certainly don't know, but I don't think it's on the agenda anytime soon. Margaret says, great question. Julie, yes, you're right. I agree with you, Margaret. Thank you, Julie. Shay says that would be good. Yes, Shay, I'm going to make sure that gets on the ticket and that we have these kind of regular updates on the ETF side of things, specifically within both of our themes. Keep your questions and comments coming. I am loving the interaction here with everyone. It's really, really great. Yeah, you're right, Julie, it is tricky. I know indeed. Okay, so if we go over here now, so back in April, you could see this, the S&P were introducing the mid-cap 400 ESG and the S&P small-cap 600 ESG. And of course, this was no sooner going to happen. And therefore, we can now see that ETFs are now looking for, okay, if we can't just, niche down on ESG, well, then we need to niche down on ESG in kind of those more peripheral ways. Now, you and I both know there is so many slices and dices of different types of ETFs. So many of these. But I will be keeping my eye on that for you so that when you're here and you're part of the show, your finger will also be on the pulse. So this is another area of fast growth is what about if we combine ESG with those kind of smaller caps? To anybody who's not familiar with what I mean by smaller cap, I mean market capital. And market cap is the number of shares multiplied by the share price. So the lower caps would be the smaller companies. And of course, why would it be that a smaller cap couldn't have more ESG potential, or at least equal ESG potential to a larger cap? Why wouldn't it? So that's certainly something to watch there as well that I wanted to also let you know about. Now, in addition, what I also wanted to do is that I wanted to point out this piece here from Track Insight, right? I just want to bring you a couple of statistics here as well. And I just wanted to talk to you about some ESG investing in Europe, right? So yet again, Europe is dramatically increasing, right? Yet again. So if you look at ESG AUM, which is assets under management, and flows across regions, look here, right? Look here at what's going on. Europe, now this is Europe, Middle East and EMEA is Europe, Middle East and Asia in this case. Yes, so in that case, as you can see here, is that there is much more money in that area than in the US. And you can see there has been significant growth here in the US for sure. Now this is going from 2020 to 2021, but there's been even more growth in the EMEA region. And look at this figure over here. I think I tweeted this out today. I always say this, I really like Twitter. And you know what, Glenn is great on Twitter as well, if you want to reach out to him. I tweeted this out today, is Europe represents 63% of the ESG market in terms of assets and attracted 68% of the global ESG flows over the first quarter of 2021. There you go. Europe really and truly is leading the way. And it's not often, even Tracking Insight says this, Europe is rarely ahead of America in the ETFs industry. But when it comes to ESG, it continues to, and that trend is showing no sign of stopping. But what we also want to point out as well, you know what is growing is Asia. And that is where I'm wondering now, is that an area that we're going to see more and more growth of, is specifically ESG ETFs, specifically invested in Asia ex-Japan, in all of those areas that we're used to seeing when one might look at the Asian markets. And I don't just mean in the emerging markets, I just mean generally in the Asian region. So I want to just come on down then. And now what I want to do is not just show you where the money is going, I also want to show you the providers that is mopping up the money as well. So let me come down here, and who is surprised by this? Okay, iShares yet again. iShares is the one. Now iShares does a great job of offering great opportunities in this market. which is where I'm going to bring you to as we wrap up today's episode. But ESG flows of American providers here. BMO has got 394 million. Okay, quite small. Global X. Oh yeah, I mean, that's one that a lot of us would be quite familiar with, 2 billion. But when it comes to iShares, look at that. iShares is leaping ahead. And I don't know if any of you saw the letter that the CEO, Larry, of BlackRock has written out to companies. It's a letter that he writes every year, and he goes out to ETFs and just says, look, sustainability is where it's at. And I spoke about that letter when I was on, I think it was the Hot Stocks panel last October. It's not the first time that he's written a letter of that sort. So the market sees ESG is rising, iShares sees that ESG is rising, and investors see that ESG is rising, and iShares, of course, is there to meet the demand. So as you can see here that there's a variety. Let me go over here. So the European ESG market is growing, and particularly it's iShares, Spiders and UBS. Now, I'm always intrigued by this because, Deutsche Bank has been one of the ETF providers in Europe that has really tried to steal a march, because Vanguard wouldn't be at all as big in Europe as it is in the US, whereas Deutsche Bank would be. Now UBS is trying to steal a march on that. And there's a variety. There's many of these. There's a variety of these providers who are coming up with new ideas and, of course, trying to gain further ground. But it is incumbent on me. It is incumbent on me to bring you back to the iShares website as we wrap up this episode, so that you know how to navigate this particular area. So far we've talked about what ETFs have gained the most momentum from the point of view of RT. But what I can't do for you there is pick out the ESG ones. So that's why we looked at the ones that have got the most volume. We've also looked at where the indexes are growing. We've also looked at where the money is going. We've looked at where the providers, where that money is growing. But now, of course, I want to do what you've all been asking me to do, which is which are the ones that are growing the fastest. And how can I find that for you? Like that. We're all about speed and efficiency as well as quality here in the show, aren't we? Okay. Now, what I'm going to do now is going to bring you over here to the iShares website. Okay, so again, follow along there with me if you are interested in doing so. Okay, follow on. Just going to give you a moment there to catch up with me there. Okay, so here is where it depends on who you are, right, Julie? If you're in the UK, what you will have to do is that you will have to pick your region. I'm in Europe. I'll have to pick, let's say, my region. It's not that I have to, but Julie, just like we were saying there, I can, if you pick on the US region and you can't invest in anything there, well, what good is it to you? As I say, unless you go the other way around. If you're in the US, you can go to the US region. If you're in Canada, you can go to the Canada region. You pick wherever you want to go. I'm going to pick the US solely because I know that's probably where most of you are joining from. Okay, now, so I'm going to go over here to America, United States, okay? Place of love. See, I mean, honestly, anytime I go onto the iShares website, and many of the ETFs I would have bought over the years were iShares because I just knew they were good. Generally, I like them to be liquid, and a variety of other things. So, but when you go on here, you'll see so many. Generally, what will jump out at you first are the sustainable type of ETFs. Now, what I'm now going to do is I'm going to go to our funds, and I'm going to go to view all funds. Now, okay, Tim, you said, what is ESG? Tim, you're super welcome for a start, and we're delighted to have you. And you may be a newbie, but you're very welcome, and I hope you come back to lots more episodes. I actually spoke quite a lot about what ESG was at the very top of the show. So if you want to go back and look through this episode, you'll get a much wider definition of this. But ESG is environmental, social, and governance. Okay, that is what it is. It's looking at stocks and funds. Today we're talking about funds, specifically ETFs, around those metrics of E for environmental, S for social, and G for governance. Okay, now, you're going to follow me now, everyone? You ready to go? Right, so we've got ETFs here. And what I'm just going to ask you to do is to come right over here, right? Don't go to asset, let's go to asset class just to be sure. Just pick equities here. So we just want stocks, okay? Now, I'm not going to go into any sub-asset class here, right? Because that's going to be different sizes and so on. I'm not going into that. I'm not going to go into markets or regions, okay? You can do all that if you'd like yourselves afterwards. I'm not even going to go over here to product range. What I do want to go over here is sustainable, right? And over here, they have screened ETFs. So screened means that they've excluded certain things. They've taken out tobacco or, maybe oil or coal, or they might have taken out weapons, right? Broad ESG is the type of ones that we've been looking at already. And thematic would be very specific, maybe solar energy, for example. Okay, definitely, Tim, I do hope you do, because I give a lot of explanation there, and I also differentiate between ESG and SRI. But stick with us and keep your comments coming. Neve says, I look at the industry, then you Google it. For example, transport, then you look for ETFs in transport. So Maria says, climate change ETF, Tim. Hi Susan, thanks Maria. And you know what, great to have you back, Maria. Haven't seen you in a while. Great to have you back, and certainly the peer-to-peer learning that's going on here in this show is brilliant. Neve says, but I like your way better if possible. Yeah, and there are, and we'll talk you through more unit searches, all right, Neve, over time. So I'm going to go back up here to all. Okay, now here we go. Beautiful. Here we have a list of the ETFs that are provided by iShares in this space. And you can do this for any of the ETF providers like Vanguard or State Street or any of the others. Look what's up here. Top of the pops. Top of the pops up here is ESGU. Where did you hear that one earlier? Oh, that's right, on this episode when we analysed it, or when we put it over there into a watch list. That is because, like I told you, it's gaining an awful lot of ground in terms of return and in volume. It's one of the ones that a lot of people are talking about at the moment. But what you asked me for was, what are the ones that are growing? What are the ones that are growing in terms of return? And that's what I want to show you. Okay, now before I do, Maria says, lately having technical issues. Don't worry, Maria, we're right here for you, and you are very, very welcome back. All right, so if I take a look up here now, so you can see here inception date. Now, some of you might say, I want the oldest type of ETF because it's likely to have the most AUM. So the oldest one here is SUSA. This was back here in 2005. DSI, remember I told you about that? It's one of the oldest ones as well. Often a very broad-based one that I talk about a lot. SDG, of course, the one with the Sustainable Development Goals around global impact. So you can see that. If you want the gross expense, well, let's go for net expense ratio. Cheapest ones, XVV. And XVV was one that I was also going to mention to you. That is a screened S&P 500 one, right? So that's looking at the S&P 500 and screening out those type of impact stocks. Then you can also see the amount of assets over here. The smallest one there, is largest one, 19 billion there in ESGU, the one I was telling you about earlier. Now, here's where the cookie crumbles. You know what none of you have asked me? None of you have asked me yet. None of you have yet asked me which is the most ESG of the ESG ETFs. None of you did that. And that is the question though, is that and by the way, that will happen. Maria, you're super welcome. No problem at all. And we're just delighted to have you. So that's the thing, is that as time goes on, that is what we will be asking, is what is the most ESG? Which one actually ranks the highest in terms of ESG? And how we can answer that is by clicking on this one. AAA up here. Interestingly, the AAA ESG stock is ESGD, the one that I showed you as well a little bit there earlier on. Generally, these two will be broadly similar. The quality score. So the quality score here on this one is 8.72, which is ESGD again. The carbon intensity here, and this means, now I haven't seen this in a while, sorry, I haven't seen this at all, is where 100% of the fund is actually covered in terms of that. The ESG coverage here is the 100% one. This one means that this fund has every single stock that's in it is now examined from an ESG point of view. AAA, that's right, Maria. AAA means that it's got the highest ranking in terms of ESG. Bill G says, what is MSCI? So MSCI, Bill, is like S&P, right? It's an index provider. MSCI is Morgan Stanley Composite Index. Morgan Stanley Composite Index, and they're an index provider. Similarly, S&P is Standard & Poor, and again, they provide the S&P 500, S&P 100, S&P Global 100. So it's an index provider. Cool, says Maria. Great stuff. It's not so cool in Ireland at the moment. We're experiencing a heat wave, but it's gorgeous, lovely. Bit like Julie over there. Gorgeous heat wave as well, I'd say, going on your side of the water. Okay, now, and all of this data is based on July 2007 over there. Okay, so what we can do here is, just want to go into more data views here, and I now want to finish up on which one has been returning the most. So what I'm going to go on here is I'm going to go to price, quarterly, there we go, and year to date, thus far, the one that is top of the pops is XJR. Look what XJR is. screened S&P small cap ETF. So it's taking two elements of ETF, two elements of ESG, one element of ESG, which is screening, taking out the stocks that don't fit the bill. And then on the other hand, it's also the small caps. It's the small cap ones as well. So it's the smaller ones. See what I mean? It's bringing those two trends together, ESG as well as dropping down the caps. Now we can also see down here you have ESML, which is the iShares ESG Aware ETF, and so on. Like, look at that. Like, look, DSI delivering 16.37% this year, and so on like that. Now Annie says, wondering what is good retail ETF. That's really simple to answer, Annie. And by the way, I've now got to where I needed to get to in this episode. So if you have any questions, pop them in there into the chat and we'll get through as many as we can before the guys in the US are knocking on my door saying, okay, Susan, like, time to go. Although try keeping an Irish woman quiet. Doesn't kind of work. Okay, so to tell you, wondering what a good retail ETF. Okay, again, and it comes back to what is good to you. Like, is it lower cost? Is it high volume? Is it one that has been around for a while? You know, what is that? But how I would look for that is I would take this off in terms of all. Then what I would do is I would take a look at sector, which isn't in there. Product range over here, megatrends, sectors and industries, and show. And there you go. It might be a consumer, for example. Yeah, might be consumer ETF, perhaps you might be looking for there. And that's the way in which I would go about it, Annie. And I would also, again, you know, I wouldn't just stick with iShares. I would go on to maybe Vanguard or State Street again, but know what you mean by good. So Maria says, cloudy in Maine, but 57 degrees. Nice. Oh, it's not cloudy here at all. It's gorgeous. Just lovely. Happy days. Bill says, go over that data view again. Sure thing, Bill. No problem. Okay, so let me go back to the beginning, Bill. Just going to turn off what I put on for you there for a start. Okay. All right. Okay, so I'm going to go back over here to iShares.com. Okay. Then I'm going to come down here to Americas and US. Again, Bill, wherever you're tuning in from now, you pick that particular area. Then I'm going to click Our Funds, View All Funds. Okay. Now over here, what I'm going to do is what I did was I clicked on ETFs. I picked on equity. I didn't have to, but anyway, I did. Because I could find, like, that's another area I'm going to talk to you about another time, is the asset classes beyond equities in ETFs. Now, I know I spoke, to a degree, I spoke about that in the REIT episode, but I just want to go beyond that to look at, like, when we look at commodities, when we look at bonds, when we look at other areas. And then I clicked sustainable over here, clicked all. Okay, here we are. Now, default, what happened then was that iShares said, well, if Susan is clicking this, then probably what she wants is she probably wants the sustainability information. And I did. But what I did then was that I clicked on more data views and I came down here to average return price quarterly. There you go. I got the year-to-date return, the year return, the 5-year return, and the 10-year return. I probably, if I go by this, there's only 2 of them that actually have 10 years of data to work off it all in the first place. So that's what I did, Bill. Margaret says, this is really helpful information, Susan. Thank you. Margaret, my pleasure. I'm just delighted that you're all here spending the time with me. Annie says, high volume and dividends. Okay, Annie, right. Come back now again. Right. So this time, what we might want to do is the product range we want to see would be dividend. There isn't any. You see, this is what I'm expecting now, Annie. This is a trend I'm expecting to see is, and I remember talking to somebody in Fidelity one time, like randomly, and they said, if you were to design an ETF, what would you design? And I said, an income-based ETF. Sorry, an income-based ESG ETF. People want that lovely Venn diagram of income and ESG together. In the center, that's where it's at. And I don't see anyone have picked up that. Let me see. Valuable content, love your energy. Shay, that is there all the time. Promise, every episode, you will see this happening all the time. Let me see. Julie says, yes, very helpful. Guys, I'm loving the love. Thanks a million. Thanks, really. And, again, if you could press the like button while we're here, I'd really appreciate it. And we'd also love if you're here. We've also tried to make this regular, where it's going to be the 3rd Wednesday of the month as well. And all of the shows they're all up on YouTube already. You know what's going to come. So if you do click on the subscribe button to the live YouTube channel, you will be automatically updated as regards when all that's happening as well. What else have we got here? Does the 10-year return represent a yearly return? Right, Christian, let me go back over here. Now, I'm going to pick on an ETF that has a 10-year return, and I'm going to answer that, right? So DSI is over here, because there's a couple of different ways that iShares do this. Okay, right, my document is loading. I love that you can click here to expedite. Like, why wouldn't I have done that? Now, this is no help to me. This is no help to me at all. That's not what I wanted. I don't want the fact sheet. Sorry, now, I meant to click on, because the fact sheet won't give me the detail that I'm looking for. This will. All right, now you see here the performance here. Right, Christian, so again, Christian's question is, does the 10-year return represent a yearly return? Okay, what you need to do here is when you go into the performance, right, when you go on here to the iShares website, right, you go on here to the iShares website, you can get overview, performance, etc. Click on performance, it'll bring you down here to the performance area. And this is the average annual return. This is the cumulative return. So if you add them all up, so over 10 years, if I had invested in this 10 years ago, my return would be almost 300%. Or then there's also calendar year, the actual return I would have got on a yearly basis. So Christian, no, the fact sheet won't give you that. You need to be able to click on the tab that you want. So you can get all three, either the average return over those 10 years, which is, you know, average, it'll give you an indicator. Cumulative will give you the uninterrupted return. And for those of you who love your dividends as well, there you go. So you can get the total return as distinct to the market price. And then also you have your calendar year as well. So what actually happened each and every year, you also have those too. Bill said, so sorry, don't be at all sorry, Bill. So sorry, but I missed how to limit to US ETFs. Okay, let's go back to the start. So Bill, I'm going to go back here to iShares.com. Okay, iShares.com. I noticed, by the way, the guys, and they are guys, I noticed that they said lol when I spoke about trying to keep an Irish woman quiet. Oh yeah, I'm behind the microphone here, although they could pull the plug, so I better not be too cheeky. All right, so let me just scroll down here. I'm going to go to iShares, okay? And you see here, Bill, you see this? Is that I have to pick an area of how I can actually go into the site in the first place. So go to iShares.com, and the first page that will appear here is you actually will have to pick over here, you'll actually have to pick your region yourself. In this case, I picked here, United States, and then that led me into the US. The reason I picked it is not because I can invest in them directly, but because that's where most people are. Now, okay, Sherry, interesting question. And do you know what, Sherry? It's important that we get some cynicism on the show as well, because it is important it's also important to discuss those, right? So Sherry says, why in the world would an investor want to limit their returns by restricting our choices to some feel-good fluff like ESG? Interesting, Sherry. Very interesting point, right? Do you know what I'm going to do is, can I ask the guys, I know they're, Joey, I'm really talking about you. Joey, can I ask you a favour, please? Would you mind putting the link to the Fantastic Female Fridays episode where I discussed how does gender diversity affect the bottom line? Would you mind just putting that link into the chat there, please? Because I'll tell you why, Sherry, is that what I did in that episode, right, was I took a niche of ESG. I took the S of ESG, which is social, and I looked at gender diversity, and I said, same as you. Is gender diversity like the right thing to do, a nice thing to do, helpful thing to do, like feel good thing to do, or does it actually affect returns? In other words, if we were to solely look out for companies that had gender diversity at the executive level and in the board, I looked at both, does it actually affect returns? And the answer was A, yes, B, it either was neutral or higher. So the point I'm making here is that you wouldn't be limiting your investment returns by looking at this. The question I want to interrogate all the time, and I want to do it, is does ESG either hurt your returns, or is it the same thing? Does it deliver the same as the market return, or does it do better? And that's the question that we will have on an ongoing basis. And the answer to that question will, of course, will change with different years. But the point is, can ESG deliver us to outperform? Can it allow us to invest with our values and to deliver value for us? That's the question. So that is... And by the way, I was waiting for someone, like usually in every episode, someone will ask a question like, why bother with this? And I welcome those. I encourage those. We need to have those conversations. But certainly, when I looked at that, Thanks a million there. Joey has just put the link there in the chat. When I looked at that, gender diversity really does deliver. And we looked at a variety of ETFs, for example, that made that thesis investable. And also I compared in comparison to the S&P 500 in order to do that. Nobody necessarily saying you should, but that certainly was my experience. And I really dug into that theme. And what's more is I wanted to do it because generally people would look at me and say, well, you're a woman. You're always going to say gender diversity is important. And of course I am. But therefore, is my bias holding me back as an investor? And the question is, no, absolutely not. Linking actually that bias to investing delivers all the more in that case. Let me see. Maria and Shay are laughing at me being too cheeky. I can be cheeky, all right. Let me see. Christian says that explains it. Thank you. You're super welcome. Maria is hoping Joey enjoys Disney. He was actually there. He was actually there not so long ago. We were having a chat there in our tech check earlier on, Maria. We were comparing the heat of Ireland. I never thought I was saying the heat of Ireland in comparison to Florida, but right now we are. So, on that note, I know I have gone over, but I really want to thank each and every one of you for just being a truly lovely audience today. It's been wonderful to talk to you about this. It's a theme where there was lots and lots of questions. And on top of that, there was lots and lots of ideas that you had, questions that you had. And I really want to look at this holistically from a truly investing point of view. Lots of trends going on out there, but this show is all about looking at the investability of ESG and technology. Now, I know we didn't get to talk an awful lot about technology today, but underpinning, of course, the ESG ETFs is the technology of the indexes and the actual instruments that allow us to do this. On another day, I will talk to you a lot more about technology, but today I specifically wanted to focus in on this. So, Maria tells me I'm awesome. I'm delighted to hear that, Maria. Thank you. But so are you. Boljek says, so thanks, you're super welcome. And indeed, Margaret says, great show. Cheers, Susan. Take care. I will indeed, Margaret, and likewise. And I hope we'll all see you again. Remember, if you do subscribe, then you don't have to be putting dates in your diary or anything else, although it's helpful to do that. The third Wednesday of every month, that's when we're planning to run the ESG and Tech show. This is, Joey will tell me now if I'm wrong, I think this is the third ever episode of this show that we're having. It's something that I'd really like to grow because believe me, this trend is growing and I think it's important that we understand it and that we really wrap our arms around it and that we understand the way it's going. And not just get, caught up in headlines and news and all that sort of thing. We want to keep our feet on the ground, our eyes in the future, and of course, investing with the right ideas in mind. So on that note, from this lovely sunny Dublin, thank you all to you all. And I will see you for the next episode of Fantastic Female Fridays soon, as well as the ESG and Tech show. Thank you, everyone, and goodbye.